Mid-Atlantic ADA Center.
I am so excited. It brings me great honor to introduce Marilyn Morrison. She's the director of Maryland State Work Incentives Network. Marilyn is a seasoned professional with over 30 years of experience assisting individuals with disability to achieve their employment goals. With a deep understanding of Social Security benefits and work incentives, she has helped countless clients return to work and manage their benefits effectively. Marilyn is passionate about empowering individuals to make informed decisions and is excited to share her knowledge with you today. Marilyn, the floor is yours.
Thank you so much, Thomasina, Emily. Let's advance to the next slide, slide 13. So a little bit about my program. I am the director of the Maryland Work Incentive Network. We are part of the Work Incentives Planning and Assistant Project for the state of Maryland. We are not a state agency. We are actually a granted program created and funded by the Social Security Administration. So I don't work directly for the administration, but I'm paid by the administration. We provide free services to SSI and SSDI beneficiaries. You do not need a referral. You can call me and ask questions, and we can get you to where you need to get to. My program helps you understand and use work incentives to become more independently financial through work. There are a number of work incentives and working rules that go with receiving SSI and SSDI, and that's really what we're going to be speaking about today. I do not function as an SSA claims rep or a rep payee. We do have a lot of back channels that we can go through. We have more contacts within the Social Security Administration to get the information that we're looking for, but we do not take responsibility for pay reporting or any of those claims rep responsibilities. The next slide, please, page 14. Slide 14. So who do we serve? We serve individuals who receive SSA disability benefits, either SSI or SSDI. Anyone between the ages of 14 and the full retirement age. Everyone has a different retirement age. It used to be 65, and now it can be anywhere from 65 on up. If you live anywhere in the state of Maryland, I do have staff in on the Eastern Shore, on Western Maryland, as well as the DMV. I have a staff of 5, so we do cover the entire state. And then this also includes individuals who are employed. You're engaged in self-employment. You might be part of the gig economy, actively seeking employment, or otherwise preparing for employment. If employment is somewhere in the goal, or even if you're just thinking about employment. Slide 15, please. So what we're going to talk about today is just a general understanding of the differences between SSI and SSDI, the working rules for both SSI and SSDI, and then the available work incentives for both. You're not going to be experts in this field. My goal whenever I give these trainings is to really create a sense of awareness. So there's an understanding that there might be working rules and work incentives available to you. And every person is different. Every situation is different. But this is what really we're going to be speaking about today. Slide number 16, please. Okay, so let's talk first about just some general, what I call checklists for success. And I always tell this story because I always have it at the top of my slide that says, don't look for logic. When I first started doing my training to become certified as a community work incentives coordinator, I was in a classroom and there were a lot of Social Security people around. And I have a tendency to ask questions. If I don't like the rule, you have to give me the reason why the rule exists, or I'm going to make a new rule. This just makes my husband crazy. So my hand kept going up, going, well, why is it this? And why is the rule that? And why is this happening? And finally, somebody from Social Security leaned over to me and said, don't look for logic. And I have to say that was the best piece of advice I ever had from anywhere from Social Security, because a lot of these rules sometimes don't make sense. So asking why the rule exists, sometimes it's not going to have an answer. There's going to be a shrug. Sometimes you just have to understand the rule is the rule is the rule. So the first thing that I do want to talk about are some of these basic checklists for success. When you call Social Security, when you call that 1-800 number, and you're asking a question, keep a record of the date that you called, the name of the person you spoke to. They will give you their name. They'll give you their operator number. Generally, when they answer the phone, they'll say, "This is Bob, and my operator number is 12345." You can ask for that again. Make a note of exactly what you asked. Make a note of what they told you. The reason why I always recommend this is because if for some reason you ask a question, you take that advice that Social Security has given you, and because of that advice, there's a negative impact. You can always go back and you can show that you followed the instructions that were given to you, maybe erroneously or with a misunderstanding. So it's always good to keep a record of that. When a major life change occurs, either an address change, marriage, employment, loss of job, divorce, children, anything that would have an impact, report that to Social Security immediately. I always recommend to report it both to the 1-800 number as well as to your local field office. And go back. Something happened. There you go. And to the local field office. The reason for that is that you just want to make sure they have that information. Now, getting it to the local field office can be challenging. I understand that. And I do have fax numbers that will make it easier if you have access to a fax machine. Also, when you're emailing Social Security, do not include any personal identifier information. Do not include your Social Security. Do not include address. You can put your name and you can put your phone number, but do not include anything else. The other thing is, do not include any attachments. Social Security will not open attachments to emails unless you're considered a secure partner. If you are not a secure partner, do not include attachments. Also, make sure that you make copies of all of the documents you give to Social Security, both the forms that you fill out and the evidence that you want them to have that are in your possession, and don't lose those copies. Chances are they're going to ask for that information again. If you're working, oftentimes they will do something called a work activity report. They need to do a work review. They're going to send you that form. That doesn't mean they're never going to send that form again. They might send that form 3 or 4 years down the line. And it's always good to know how you filled out the previous form so you don't need to reinvent that wheel. It's much easier to fill out. So next slide, please. Number 17. Make sure that you're promptly opening and reading all of your mail that you get from Social Security. When SSA gives you a deadline response date, make sure that you're complying with that date. If you're in that initial eligibility phase, if you're not complying with that date, they can automatically deny you. If they're sending you a letter saying, "This is what we're about to do, give us more information," you need to deal with that very quickly. Make sure you're sending that additional evidence that they're looking for. Make sure that you are seeking that help immediately. And then again, keep all the paperwork, letters, and the mailing envelopes. Mailing envelopes are very important because if they're asking you to comply with something that's 15 days from the date of the letter, but you didn't receive the letter until 10 days later, you need to show that proof, and that's how you're going to be able to show that proof. And again, do not lose any of this. Throughout this entire presentation, you're also going to hear me say this a lot, but you must report your pay stubs to Social Security every month. Be sure to report to the correct field office. The zip code of the payee or the beneficiary is key. You can report that by mail. You can walk into the local field office. You can use the My SSA account login. You can fax it. There's also an app that you can use as well. And make sure that you're keeping those wage records in your file. Everyone, this is across the board at this point, everyone should have their own MySSA account. This is a login feature that's on the Social Security website that allows you to go in and look to see at pay information, if there's added information regarding retirement dates, income information. It allows you to upload your pay. It has a lot of features that are within the system that can make it a little bit easier when you're looking at some of these rules that we're going to be talking about. But everyone should have a MySSA account. And again, that is needed to report earnings, apply for benefits, and then track application status. Page number 18, please, or slide 18, I'm sorry. Okay, also remember, and I'm going to say this again, when a major life change occurs, make sure that you're reporting that to Social Security immediately. The big one that I find is an address change. Make sure that they have the correct address change. The reason for that is that Social Security mail does not get forwarded. So if you're moving and they still have a previous address and there's important documentation that they're looking for, they're going to send it to the address that they have on their file. It is not going to be forwarded. If they're looking for a review, if they're looking for additional information, this can have a real negative impact. So make sure that address is correct. Next slide, please. Slide 19. Okay, so let's talk about what work incentives are. So work incentives really are just special rules that make it possible for people with disabilities receiving either SSI or SSDI to work and still receive their monthly benefits, as well as Medicaid or Medicare. And Social Security calls these rules work incentives. I call it leveling the playing field. And we're going to find out why in a minute. But these are just these added pieces and layers that Social Security has put into the working rules for people that are receiving either SSI or SSDI. And it really does help that individual maintain their benefits and enable them to work. So slide number 20, please. So SSI and SSDI, there is a difference. These are two types of disability benefits that Social Security administers. The rules and the work incentives for each are very different. There is one work incentive we're going to talk about that's very similar on both sides, but it's really important to know which one the beneficiary or anyone that's receiving SSI or SSDI, it's very important to know which benefit this person is receiving. Part of the process that we take on is we verify that. So when we open a case within our agency, we have a number of releases of information that we ask you to sign. And one of those is a release of information that we send to Social Security for verification of benefits. That way we can tell you exactly what benefit you're receiving, how much you're receiving, and then maybe there's something out there that you're eligible for that you might not be aware of. So it's very important before starting a job that you do have this benefits counseling piece put into play, and then we can help you find out what benefit you're receiving. And oftentimes it'll be on the top of a letter, but as I said, we do get that verification from Social Security. And there are some people that receive both SSI and SSDI. So that's also very possible. Slide number 21, please. So I know this slide is a little jumbled, and I do apologize, but this is how you can tell them apart. And I have two columns here. The first column is supplemental security income, or SSI. With SSI, you do need to meet the Social Security's definition of disabled, blind, or you're over 65. You must have limited income and resources. This is a means-tested program. SSI can go up and down based on your income. So based on your working income, your SSI is going to go up and down. And I did not update my 2023 federal benefit amount, but I will tell you now the 2024 federal benefit amount is $943. That's the highest amount that you could get in 2024. And in 2025, that number is increasing to $967. So the most an individual can get when receiving SSI in 2025 is $967. But again, that can go up and down based on earnings. And I'm going to show you in a couple more slides a calculation so you can see how that calculation works. It also, with SSI, is automatic Medicaid eligibility. And we're going to be talking a little bit more about that as well. On the next column, you'll see Social Security Disability Insurance, or SSDI. And some people might call it Title II. Again, you must be blind or meet Social Security's definition of disabled. In this case, there is no resource test. They really don't care how much you have in the bank. It is not means tested. They don't care how much you have in savings. They don't care about any of that. The amount that you receive from SSDI or Title II can be based on a number of factors. It can be based on your work history. It's that FICA that we pay into the system. It might be your spouse's work history, or it can also be your parents' work history. And we're going to talk a little bit more about that as well. With SSDI or Title II comes Medicare, but there is a 24-month waiting period for that eligibility to Medicare. When you're looking at SSI, that Medicaid eligibility is automatic. But again, there is a 24-month waiting period for Medicare. Okay, the next slide, please. Slide 22. Slide 23. So we're going to talk about SSI first. So with SSI, again, that's a cash benefit paid to individuals who meet medical, disability, and the financial needs criteria. Okay, that's very important. This is a means-tested program. You cannot have more than $2,000 in resources. And I do have a list of resources that we're going to be talking about. In 2024, the maximum federal benefit amount that a person can receive with SSI is $943. That is the max. Again, in 2025, that's increasing to $967, and that will be as of January 1st. And again, with SSI, SSI is directly associated with Medicaid. Okay, slide number 24, please. Okay, let's talk a little bit about Medicaid. I'm just going to skirt it very quickly, but Medicaid is that federal medical assistance program, but it is administered by the states. The Medicaid eligibility is based on a person's resources, bank account, property, and income. Once you're found eligible for SSI, you are automatically eligible for Medicaid in the state of Maryland. And in some cases, you might be automatically enrolled in Medicaid. Okay, so that's the basics for Medicaid in this area. If you're in the state of Maryland, Maryland has, I believe, 65 different categories of Medicaid. So if you're not eligible for Medicaid by reason of being eligible for SSI, there might be some other ways to walk through that door of Medicaid. We are going to talk very specifically about another way to become eligible for Medicaid. Slide 25, please. So SSI Medicaid programs have very specific resource limitations to be eligible. Again, the monthly maximum amount for SSI for resources is $2,000 for an individual or $3,000 for a couple. This is set by statute. It's the same in every state. A person cannot have any more than $2,000 in resources or $3,000 for the couple. And slide number 26, please. So let's talk about what a resource is. So a resource can be cash, savings accounts, stocks, bonds, CDs, IRAs. Really, when we're talking about what I call liquid assets, this is anything that you can draw from. It doesn't matter if there's a penalty or not. So even if you have a CD and you're going to incur a penalty to close out that CD, that's still considered to be a resource. This is any combination. So a combination of all of these accounts, you cannot have more than $2,000. Land that you own but not lived on. Anything owned that's converted to cash and used for food and shelter, and this includes utilities. This is very rare, but we do need to put that in there. We do need to put this on the list. And then resources of a spouse. So anybody that's under the age of 18 is considered a minor, and Social Security will look at the resources of the parent if the beneficiary is under the age of 18. Now, as soon as that person turns 18, then they are no longer considered to be a child, and they're looked at as an adult, and it's only their resources that are looked at that point. Okay. Slide number 27, please. So these are the excluded resources. You can own a home, you can have household goods, you can have personal property, you can have clothing that someone gives you as a gift. You can have a burial space for the beneficiary or immediate family. You can have a burial fund of up to $1,500 for the individual and or the spouse. A life insurance with combined face values, that's that cash out value, of not more than $1,500. Retroactive SSI or SSDI for up to 9 months. So when you become eligible for either SSI or SSDI or both, you're going to get a back payment. That back payment might be over $2,000, and that's okay. It's completely excluded from that resource limit for 9 months. And that's really important to manage and know when that 9 months is up, because once that 9 months is up, even though you might not have touched it, it's going to be counted as a resource. Property and specific trust. This is really, for our purposes, a special needs trust and irrevocable trust. It's very specific. A bank account for a plan for achieving self-support. I'm sorry, that's part of an SSI work incentive. A plan essential for self-support is also a work incentive. You can have one automobile regardless of value. One automobile, and that's it. I once had a client that received an overpayment because he had an automobile. He purchased another automobile, then he sold automobile number 1. So for a brief moment in time, he had 2 automobiles, even though he sold automobile number 1. So you really want to think about that timing when that happens. ABLE accounts, anything in an ABLE account, and we are going to talk more about ABLE accounts. Those are excluded, special needs trust or other exclusionary accounts. Okay, slide number 28. All right, living arrangements. So this is a really big one, and there have been some rule changes for this one. So with SSI, SSI is for food and shelter first. So when you go in for your initial interview for SSI, one of the questions that the claims rep is going to ask is, do you pay rent? The answer better be yes. As long as you're paying rent of at least 1/3 of that federal benefit amount. So as long as you're paying at least about $400, $500, then your SSI is not reduced. If you're not paying your fair share of rent, then that $943 for that federal benefit amount will be automatically adjusted, and it will be lowered by 1/3. Okay. Now, up until April 1st, 2024, it was also considered to be food and or shelter, and you'll see that technically the rule has not changed, but it's been in a memo form. So what Social Security looks at is if someone provides food or shelter, the base SSI check will be less than that $943. But as of April 1st, food is no longer considered. They also changed the rule. For a long time, they looked at the base rate of rent in the area, and as long as an individual was paying base rent or comparable rent in the area, then that SSI was not going to be reduced. We live in a high rent area. So for someone to pay comparable rent, they most likely would have to pay far over $943. So that that particular rule also is no longer looked at. The rule that's looked at now is as long as an individual is paying at least 1/3 of the federal benefit amount of $943, then they should not see that automatic reduction of that of 943 to about 6 something. So in this area, I'm recommending that folks pay or charge, if you're a parent and you're going to be charging rent for your child, which you should be doing, you need to be charging at least $400 to $500. Again, if you're in the application status and you're applying for benefits for a child, when you walk into Social Security, they are going to ask you, are they going to be paying rent? The answer is going to be yes. It doesn't matter if you're a parent, if you're a relative of any type, you're an aunt, you're an uncle, a cousin, it doesn't make any difference as far as Social Security is concerned. They're living in the household of another and they need to be paying rent. The new rule change, though, is that as long as they're only paying that 1/3, you don't need to look at utilities any longer. You don't need to look at food. You don't need to look at any of that anymore. It's just strictly 1/3 of the federal benefit amount, then everything should be fine. If for any reason, when you went through your initial eligibility stage and you do have your SSI reduced because of this, but now you do want to charge rent or you want to pay rent, I do have a simple lease that I'm happy to give you. You can email me and I can send you the lease. You do need to take that into Social Security and they can make the change just on their laptop. You do not want to mail it in because you don't know how long it's going to take for them to get that information. And they are not going to look at retroactive. They're only going to move forward at that point. Okay. Slide number 28. I'm sorry, slide number 29. This would be a good place to stop. Let me answer some questions right now before we get into the employment side of this. Do we have any questions?
Let me look here. We do have some questions. Let's see, the first question that came in, how does the ABLE Act impact resources?
So an ABLE account is completely excluded from resources, and we're going to be talking about ABLE more. But an ABLE account is not considered to be a resource.
Okay. All right, we have another question. Let's see.
Oh, I'm looking at it right now. The one thing that I forgot to say, yeah, I have a consumer who lives here in the US. She co-owns a house in Vietnam with her husband in Vietnam. Her husband and son live in the house. She does not live there. Can she get, well, I would need a lot more information. So I would say in this case, to call me offline. And the one thing that I did not say is that if we could try to keep our questions very broad, and then if there is anything specific like this, please give me a call and I can answer that question. I have a lot more questions. Oftentimes when it gets down to really specific cases, for every one question you might have, I might have 5 more questions to get to the answer. So I would say, Andy, please give me a call and we can talk about this further.
Great. Should we continue? There's a couple more here.
Nope, let's go ahead.
Okay. One about SNAP benefits. Are SNAP benefits taking into account against when SSI determination amounts are being adjusted?
Nope, SNAP benefits are completely excluded because they're another federal benefit.
Right. And the last one I see here, how is it determined that someone receives SSI and SSDI simultaneously?
That is a great question. So the determination is this. And it'll make more sense when we get to SSDI. But remember, SSDI is based on FICA. It's based on the amount that you've paid into the system. If you have a lesser amount under that 900 and in 2024, remember the SSI amount is $943. If an individual is only getting $500 from SSDI, then from SSDI. So if they're getting $500 from SSDI, SSI can come in and they can backfill up to $963. So that's how a person can get both. If an individual is getting SSDI of $1,200, there is no eligibility to SSI. If SSDI is less than 943 or the SSI federal benefit amount, then SSI can come in and backfill to that full amount. I hope that makes sense. It's a math question. It's math. I'm not a math person, but yeah, it's a calculation that Social
It's a
Security uses.
calculation. Yeah.
Yeah, it's a calculation that Social Security based on SSDI. So when we get to the SSDI piece of this, I'll come back to that question because it really is a very good question.
Okay.
So let's look at SSI. So and we're going to look at the working rules for SSI. So when other income goes up, your SSI will go down. So that kind of goes with that question that we just talked about. You're always going to have more in your pocket when you work. So the rule of thumb is for every $2 you earn, SSI will go down by $1. Okay. There's no real earnings threshold. There's a little bit of a threshold that we're going to talk about in a little while. But when it comes to earnings, there's really no downside when you're receiving SSI. Slide number 30, please. So let me give you kind of an example, and hopefully everybody can follow this. It'll make sense. So when you are working as a W-2 employee, you're getting a paycheck, okay? Social Security will look at your gross earnings. So if you've got someone, for instance, that earns $1,000 a month, and you'll see it says gross earnings, $1,000 gross a month. The first thing that Social Security will do is they deduct they exclude $20. It's just a general exclusion. They just basically say, all right, take the $20. We're not going to count it. The next thing that they're going to look at is they're going to give you an earned income exclusion of $65. So really, they're not looking at the first $20 you earn per month and the $65. And that brings down the countable earned income from that $1,000 to $915. Then Social Security will divide that by 2, which then brings it to $457.50. That's what they call the countable income. At that point, they'll take that full SSI amount of $943. They'll subtract the $457, and that's going to bring the amount that a person would receive from SSI is $485. So you can see with the $1,000 that you earn plus the $485, that brings it to $1,485. Some people get very nervous when they start seeing their SSI reduced. But in the long run, a person really is going to have more in their pocket by working. An individual that earns, for instance, $1,500 a month is still going to get about $200 from SSI. So it's absolutely possible to earn at a higher amount and still get your SSI. The one thing I do need to stress here is that you do need to report your earnings every single month. SSI is a month-to-month benefit. And you can see if for any reason you're not reporting your income every month, that you are going to be incurring significant overpayments that are just going to add and add and add. So you want to be really particular about reporting your income. If there's ever a question about how to report your income, where to report your income, you can always just give me a call, and I can certainly give you the fax numbers and the contact information for any of the field offices in Maryland. The other question that I do get a lot is what happens if you earn at a level where you're not eligible for SSI? You're not eligible for that payment. It's 0. That's okay. Nothing's going to happen to your benefit. You're just not going to be eligible for the benefit that month, but you're not going to lose your eligibility. On paper, you're still going to be eligible. It could go up and down every month. I have a lot of folks, especially this time of year, that are working seasonal. Maybe they're working retail, they're working more hours. they're working at a grocery store, Amazon, any of those pieces. Yeah, so it's not going to make any difference. You can go up or down and you're still going to maintain your benefits. Next slide, please, number 31. So let's talk about some work incentives. I know I've said that word a lot, and we're now, 38 minutes into this. So let's talk about some work incentives. We're going to touch on these: student earned income exclusion, impairment-related work expenses, blind work expenses, plan to achieve self-support, and property essential for self-support. I am not going to be talking about, today, I won't be talking about the plan to achieve self-support or the property essential for self-support. It doesn't mean that they're any less important, but I do want to touch on the most commonly used work incentives. So these are the 5 that are available. Slide number 32, please. So let's talk about impairment-related work expenses. Okay, these are any out-of-pocket expenses that support the disability and make it possible to work. So if you use Metro Access to go back and forth to work, if you have medical expenses, adaptive equipment, accessible transit costs, attendant care services, service animals, the list can go on and on. Social Security is going to take that countable earned income, that calculation that we just talked about, and they're also going to apply these out-of-pocket expenses. So it's going to bring down that countable earned income we talked about. So if a person is earning $1,000 a month, but they have $200 in out-of-pocket expenses, that's going to bring down that countable earned income that Social Security will consider. And it could mean that you'll have more of your SSI that you keep. You do have to report the receipts for this monthly when you report your pay stubs. You do have to show proof. And these are not usual or customary expenses. These are things like, as I said, Metro Access. It wouldn't be, well, I have to take Metro every day. It's Metro Access. It would be medical expenses that are directly in response to the disability, to your primary disability. Adaptive equipment, but that could be any adaptive equipment that you need on the job or off the job that enable you to work. The list is really broad. There is no specific list that you can look at. A person is looked at individually, and you do have to show those receipts. And they can be used in conjunction with any of the other work incentives that we're talking about. Next slide, please, number 33. Okay, so remember I just said that your SSI you might earn at a higher level where you're not eligible for the cash benefit. That is okay. And a lot of people get very panicky because they think that, well, if I'm not eligible for my SSI, I'm going to lose my Medicaid. That is not the case. What's going to happen here is you automatically go into something called 1619B. It's a federal benefit. And it basically says, I know I'm not eligible for my SSI right now, but that's okay. I still need my Medicaid. And you'll just flow in and out of 1619B, okay? The income for 2024 for Maryland's 1619B threshold is about $50,000. So you just heard me right. A person can earn up, I think it's about $54,000. They're still going to maintain that Medicaid eligibility as long as your SSI eligibility is still active. Now, you do have to resubmit and reauthorize 1619B yearly. So the first year, you'll automatically go into 1619B, but you do need to authorize it yearly. Otherwise, there can be some ramifications. And again, I do have a letter and I have a form that I can give you. I always recommend to send that form in every 6 to 8 months, just to make sure that that 1619B piece is kept active. But your Medicaid is active. Now, that doesn't mean your waiver is active. It doesn't mean that some of the other categories are active. But if you are considered Medicaid eligible based on your SSI eligibility, your Medicaid will stay with you. Okay. Slide number 34. Okay. You know what? Are there any questions about what we just went through? let me see. I can get here. Let's see.
There was a few questions, Marilyn. I don't know if you saw about SSI.
Mm-hmm. No, I have it right here. So how is it determined that someone receives SSI and SSDI simultaneously? I'm about to talk about that. Let's see. If a young adult is applying for SSI and wants to be considered as an adult disabled child, it's best for them to apply in person or over the phone as opposed to applying online. I'm actually about to be I'm about to talk about that as well of how a person is distinguished to be an SSDI. Hi, Eileen. Hope you're doing well. I think this is my friend Eileen. Do you know of any resources or people who work specifically for individuals who are just as involved with mental health disabilities? I do have some resources for that, and this individual can call me directly and we can talk about that. Are persons who have not worked the full quarters to receive SSA benefits eligible to receive SSI? If an individual does not have all of those full quarters, we're going to be talking about that in a minute, but with SSDI, because that's based on the number of quarters you've paid in the system, if you don't have enough quarters, then it is possible to be eligible for SSI. Again, you do have to, the criteria is still the fact that you can't have more than $10,000 in resources. You really cannot be earning over a certain level for initial eligibility. But yeah, and when we're talking about initial eligibility, so when you're applying for either SSI or SSDI, you're really applying for adult disability. When you go through the application process, you're going to indicate that you want to apply for both SSI and SSDI. And then Social Security will make the determination of where you best will fit in the criteria and where you are going to get the benefit. So you might be in a position where maybe you don't have all of your quarters for SSDI and you're found eligible for SSI, but then you continue to work. And over time, you still are paying into the system. You have enough work credits. So now you're going to move over to the SSDI side. So that happens quite frequently. Will this webinar be available online? I'm interested in the eligibility for SSI at the beginning of the presentation. I know, Emily, you can answer that, but you can always call me and we could look at the specific details of that as well.
Yep, and we are recording. This will be available on our website, the archive. So we will definitely have this available for somebody to watch it on demand.
There a pension offset rule for blind disabled. So when you're looking at SSI or SSDI, you're either when you're looking at basic disability criteria, you're either blind or you're non-blind. Okay, if your primary disability is blind, then if you're receiving SSI, the SSI amount will be the same. If you're receiving SSDI, the working rules are a little bit different. And there is a work incentive called the blind work incentive that you might be eligible for SSI. There's always going to be a pension offset for SSI. If you're receiving any type of pension, retirement, annuity, any kind of income, there's always going to be an offset. On SSDI, no, there is no offset. SSDI, and we're about to get into that, they don't care how much you have in the bank. They don't care how much you have in other earnings. It's only work earnings. Will some participating in the Senior Community Service Employment Program is a community service and work-based training for older need to report this as income when receiving? Yes, you always have to report your income and you have to let them know. The reason for that is that if you don't report your earnings, no matter what the earnings are from, if they're from long-term disability, if they're part of the CSEP program, if there's sick leave, if there's vacation pay, the IRS is going to report that to Social Security. but it's only going to come in as an amount. It's not it's not listed as how the earnings were earned. So you do have to let Social Security know that you're earning income, but you're earning income under this very specific program. Okay. Can an SSI recipient end up in share of the cost Medicaid? No, because SSI, you have full Medicaid. So I don't see how that could happen, quite honestly. SSDI, yes, it is possible. Emily, are you going to answer that question? Oh, I guess not. Okay.
Sorry, I was on mute.
Oh, I'm sorry. It says Emily would like to answer this question live.
Yep, I am just actually clicking those so you know that we have answered those. So that's just
Oh,
my way
okay.
of keeping track. Sorry to confuse
Okay.
you.
All right, great. Yeah. Oh
But
no,
there's
I
a
was like,
lot of great
oh good. She's got more
there's
information.
there's a
Great.
lot of great questions that are coming in. So I want to make sure that those that we have answered live, I just made that little note for you.
Yeah. Okay. Yes. No, truthfully, I don't see how that can happen because SSI, you've got full Medicaid. So there's no reason if you're receiving SSI if you're receiving Medicaid as an SSI recipient, you wouldn't have share of cost Medicaid. That can't happen if they have SSDI. And this is where it's always important to know exactly what benefit an individual is receiving. I can't tell you how many times I get phone calls from folks where I say, what type of benefit are you receiving? SSI. Great. How much you're receiving? $1,200. Then it's not possible to get SSI. They're getting SSDI. So it's really important to get that verification. Are the income limits for the remaining on Medicaid the same nationally, or are they different depending? Oh, Medicaid is state by state. So thresholds are different for every state, and every state has their own Medicaid rules. Every state has their own Medicaid categories. I can tell you, I was in the Virginia system for a very long time. The Virginia system, their Medicaid system is really limiting. Their Medicaid buy-in is very limiting. I know a lot of people complain about the Maryland Medicaid system, but it is incredibly robust compared to Virginia and North Carolina and some of the other states that are surrounding. But it does absolutely depend on the state, and it is different threshold amounts. Let's see, wait. Okay, just to clarify, as of April 2024, we only need to write one check for room and board and no food, as long as the room and board is 1/3 of the monthly amount. Yep, that's correct. They're actually not looking at room and board or food and shelter. They're only looking at the room rental rate. They're no longer looking at food. Let's see, wait. Do you know if an individual with a compassionate care allowance for SSDI must wait 24 months for their Medicare benefit? Yes. So Medicare, there is a 24-month waiting period from the date of entitlement. Oh wait, that's it. Wait, I'm sorry. No, I don't believe so. That's a great question, and I would have to look that up. So the question was, do you know if an individual with a compassionate care allowance for SSDI must wait 24 months? For those that are not familiar, compassionate care means it's a fast track application. It's generally there's a specific list of disabilities and conditions. And unfortunately, when you're looking at compassionate care, you're generally looking at there's death that's imminent, and the person can't wait the year that it might take for initial eligibility. But I think they must wait. But I can, if this person wants to check back with me after the presentation, I can certainly look that up for them. Okay. All right. I think that's it for right now. And let's talk about SSDI. Hopefully I answered everybody's question, except I'm so sorry for that last one, but please check back with me later. Take my email and I'll look that up as soon as we're off the call. And I think let's get going. Okay, so slide number 35. Okay, so with SSDI, there is no research test. You can have savings, you can have money in the bank. It's not means tested. You can have annuities, you can be getting retirement. In some cases, depending on the type of long-term disability insurance you have, there can be an offset to the long-term disability. But you can at the same time be getting long-term disability. You might not get as much because there's generally some very specific rules that go with long-term disability and Social Security disability. And those rules are generally through the long-term disability administrative firm. The amount that you get can be based on your work history, your spouse's work history, or your parents' work history. There is no standard federal benefit amount. Remember SSI, there was a standard federal benefit amount of $943. On the SSDI side, there's no standard federal benefit amount. So, you know, your friend might be getting $1,200. That doesn't mean that you'll get $1,200. You might get $1,500. So it really depends on income that's paid into the system. It's that FICA, okay? There is a Medicare eligibility after that 24-month waiting period. So it's the 24 months. There's a 24-month waiting period from the date of entitlement. So the date that you get your first check, there's a 24-month waiting period. Okay. Slide number 36. Okay, so there was a question about CDB. We had a question about, they're called childhood disability benefits. An individual can be found eligible as a childhood disability benefit if that individual was found to be disabled prior to the age of 22. So that means a CDB is the monthly cash payment that's paid to the child based on the Social Security earnings of the parent of that adult child. So when the parent opens their work history with Social Security, either through death, disability, or retirement, the child is going to be eligible for approximately half of what the parent is receiving. So if, for instance, you apply for your child's for SSI, or you received SSI as soon as you turned 18, or you started getting it prior to the age of 22, you are automatically designated as a CDB, a childhood disability beneficiary, because you applied for Social Security disability, either SSI or SSDI. You were found medically eligible and you had not yet turned 22. So it's automatically in your record. Okay, so to answer that question of CDB, is it better to apply online or on the phone? It doesn't matter. CDB, if you're found to be disabled prior to the age of 22, if you're applying prior to the age of 22, it's automatic. It's automatic. It's in your record. Once the parent opens their work history, then the child will get approximately half of the parent's benefit if the parent is living, and then they get 3/4 of the primary insurance amount of what the parent was receiving when the parent is deceased. And it doesn't matter how old the child is. If the child is 50 years old and they're even getting their own SSDI at that point, they've already paid it in the system and they're getting some amount on their own work history, they're still classified as a childhood disability beneficiary, and they're still going to get 50% of what the parent received. If 50% is higher than what they're receiving now, then they're going to get the higher amount. Okay, so it's actually possible, and I have had this happen, where an individual can get both SSDI on their own work history and then an added amount because of the parent's work history. So it does get very complicated, as you can see. If both parents are disabled, retired, or deceased, the child is entitled to the childhood disability benefit on the higher account of the two. So I've had it where a parent has opened their work history, a child then gets the half of the CDB benefit as SSDI, but then the higher earning parent now opens their work history and they flip from receiving 50% of the lower parent income to the higher parent income. So it can absolutely happen, and it has happened often. I see it all the time. Again, this is another reason why it's always important to get what's called the benefits query. It's something that we run because you want to be clear on what benefit you're receiving and what type of benefit you're receiving. Okay. Slide number 37, please. So when we're looking at SSDI, and this is true of initial eligibility for SSI and or SSDI, but if a person is receiving SSDI moving forward, there's always something called substantial gainful activity. This is always kind of in the picture somewhere, okay? And they call that SGA, and that's work performed for pay or profit, work of a nature generally performed for pay or profit, or work intended for profit, whether profit is realized. Okay, that's a lot of words. I got it. It's a lot of stuff. But basically what this means is substantial gainful activity, there's a number that goes with that. In 2024, the non-blind amount was 1,550. The blind amount is 2,590. Those amounts are going up. In 2025, it's 1,620. In 2025, for blind, it's 2,700. So basically what that means is that if you're working and you're receiving SSDI, if you earn more than the substantial gainful activity amount, at some point, your benefit might be in jeopardy. It's a benchmark amount that Social Security looks at that determines whether or not you are disabled or you're not disabled. Okay, it's not really something to be afraid of, and we're going to talk about why that is in just a minute. But you always want to be aware of that SGA amount. It's really important. When you're looking at initial eligibility, Social Security looks at a person's ability to earn SGA without supports. So if you've got someone that's earning $1,700 a month, but they're taking Metro Access, they have a personal attendant, maybe they have a home health aide, they've got all kinds of assistive technology, Social Security gives a value to that. So that could sway initial eligibility. But all of those factors are looked at when a person is earning over this amount on the SSDI side. Now, the point I want to make here is when you're looking at SSI will let you earn over SGA. Okay, remember SSI is month to month. So you really want to be clear on what benefit you're receiving. On the SSDI side, SGA is very important as you're working through some of these pieces that we're about to talk about. Slide number 38, please. Okay, so the SSDI is an all or nothing benefit. Again, remember SSI, it went up and down. It was a calculation. There's an offset. You still might get a little bit of your SSI if you're working. SSDI is all or nothing. You're eligible for all of it or you're eligible for none of it. There's no offset there. So when you start working, the first thing that you come up against is called the trial work period. And what Social Security looks at is any month that you earn over for 2024, the amount is $1,110 gross. If you earn over $1,110, you use a trial work period month. You can earn $1 million a month and they're not going to care. But any month you earn over $1,110, you're just using a trial work period month, and you get 9 of these, and they're non-consecutive. There is no penalty for not using trial work period. There's no penalty. If you use trial work period, great. It's really meant to try working. Once you've used your trial work period, you then go into a 36-month extended period of eligibility. Any month that you earn over $1,550 gross a month, you might not be eligible for your cash benefits. So this is where that SGA amount comes into it. This is when you really want to be careful about this. And you're in this period of time whether you're working or not. So you really want to be aware of where you are in this continuum. There's also something called extended period of Medicare coverage. With SSDI, you're automatically, remember, eligible for Medicare. So even if you're not eligible for your SSDI, there is an extended period of Medicare coverage. If for some reason you work through your trial work period, you work through those 36 months, you earn over SGA, and then you're terminated from eligibility, and then for some reason your income drops, there is a reinstatement period. It's called an expedited reinstatement, and this is really kind of a fast track it's a fast track application. You can go into the local field office, and this is where you explain that you stopped working, you're no longer earning at that level. They're going to do an updated medical review. It's not going to be as extensive as you would have when you went through initial eligibility, but it's going to be an updated piece. And that can get you back into pay status, as they say. Okay. The next slide, please. I'm sorry, slide 39. So these are the SSI work incentives that we're going to talk about. Again, there's that impairment related work expense. And I remember I said there's one work incentive that is pretty much the same on both sides, and that's that impairment related work expense. And you'll hear people call it an IRWE. We love our acronyms. These are out-of-pocket expenses that support the disability and make it possible to work. These really bring down that countable earned income. So not when you're in that trial work period that we just talked about, but when you get past that trial work period to that 36-month extended period of eligibility and beyond, you might have extensive out-of-pocket expenses. You might have a lot of tech. You might have metro access is really the big one, transportation. That's going to bring down the countable earned income. So for instance, if you're earning that $1,700 a month and you have $250 in out-of-pocket expenses, that's going to bring down the countable earned income, and that can keep you in pay status. So it's very important to report that to Social Security when you're letting Social Security know that you're working, because that's going to keep you in pay status. That can alleviate that possible overpayment. The next one that Social Security has that, and actually I have got my favorite work incentives. I know that sounds weird. I have favorites. And this is called subsidies and special conditions. Now kind of follow me on this one, because this is where it gets kind of, if it's not complicated by now, it's now going to get complicated. So what subsidies and special conditions are is any of those indirect supports that you might receive that enable you to work. So maybe you have a job coach. Maybe there's a support coordinator. Maybe you have on-the-job accommodations. Maybe you have somebody, I have a client that lives in a group home setting, and he receives assistance in the morning, helping him prepare for work. That is considered a subsidy and special condition. I have a client that is working in a set-aside position for a person with a disability. That is considered a subsidy and special condition. Social Security gives a value to that. So that means that you might be earning a high amount, but because the reason why you're earning the high amount is because you have a lot of supports. You have a job coach, you have a support coordinator, you have those on-the-job accommodations. Maybe your job is really meant to be an on-site job, but due to the disability, your job has been made to be 100% remote. But if someone else came in and did the same job, they would have to be located in an office setting. That is a subsidy and special condition. Several years ago, I had a client that was completely tech dependent. He had had a skiing accident. He was in a wheelchair. He had 24-hour attendant care. He went back to work for his previous employer prior to his accident. The employer created a job for him. It was normally supposed to be an outside sales position. They created this inside job sales position for him. He was earning about $50,000 a year. He's getting about $1,800 a month. The job itself trained somebody on the job to help him as their assistant. Normally the job wouldn't have an assistant, it wouldn't have somebody to help him. They gave him extra time off to go to physical therapy and other doctor's appointments. He had a he had a vehicle. He had an adapted vehicle. all of that meant that even though he was earning $50,000, Social Security said that nope, if it wasn't for all of these other pieces that had in place, he wouldn't be earning this income. So he was able to maintain his job of earning $50,000 a year and the $1,800 he was getting monthly from his SSDI because Social Security put a value on all of the accommodations and supports he receives. So it can be job coaching. It can be maybe your job allows you to take an extra break. Or again, they allow you to work remotely where anybody else that had the same job would have to work in an office setting. I have a client that works for CBS, and he works part-time. He's been working there for years. Normally, when you work for CVS and you're an associate, you have to help unload the truck and you have to stock the shelves and you're on your feet when you're behind the cash register. But he has some back issues and orthopedic issues. So he doesn't have to unload the truck. He doesn't stock the shelves. His job is they give him a chair, he sits behind the counter, and he's the cash register guy. Social Security said, yep, that's a subsidy and special condition, because if he were to leave the job and anybody came in and did the same job, the job would look completely different. So subsidies and special conditions are very important to think about. And it can be any type of support you might have that really enables you to work and earn an income. If you're receiving transportation through maybe Medicaid waiver or a Medicaid type program, so you're not paying for paratransit, but you do require paratransit. You're not paying for it. The services are paying for it. That is a subsidy and special condition. So it's very specific. And again, guess what? There's a form. And I can walk anybody through that form. There's also, again, something called expedited reinstatements. And that's at 60, you have 60 months from the date of termination to get back on benefits. And there's some hoops you have to jump through for this, but this is kind of the safety net that if you do work, you are terminated, you are able to get back on benefits if your income drops. Okay, slide number 40, please. You know what? I mean, let's look at some questions, because I think we're getting some questions here.
Yeah, we are, Marilyn. So let's
okay, let's see what we have. Do you know? Okay, okay, wait a minute. Can a recipient who receives SSDI receive state disability while on medical leave from a job while in recovery? It really depends on the state disability rules. An individual can get FMLA, they can get long-term disability. However, the long-term disability that they receive might be reduced because they're receiving SSDI. That's another one of those complicated questions that I would say if there's a specific case that we would have to look at that. But in general, an individual can get long-term disability, but it's really based on the working rules of that long-term disability piece of it. Do you have to take the Medicare insurance? Yeah, okay, here's the deal. Okay, do you have to take the Medicare insurance? We were on the marketplace and now we were told he has to take Medicare, and they still use his income to figure my marketplace price. Okay, yes. You have to take Medicare if you're in the marketplace. Okay, Marketplace is a federal program, so yes, you do have to take Medicare. Here's the problem, okay, just so you know, if you choose not to take the Medicare, all right, if you choose not to take Medicare and you don't have employer-sponsored insurance, then at a later point, if you then decide you want to opt into Medicare, you're going to be charged a premium. You're not going to get the standard premium cost, but you're going to be charged a penalty. Okay. So it's really in your best interest to take the Medicare. I'm not quite sure what you're talking about when you're saying he has to take Medicare and they still use his income to figure my market. If you're talking about a spouse, yeah, they are going to do that. They are going to figure in his income, because for if you're for a spouse, they're always going to look at the couple's income. But you can't. I mean, you can stay. The other piece of it, you can stay with the marketplace, but the problem is you're going to forfeit the subsidy that you're getting in the marketplace. So the marketplace cost could increase substantially, because the whole thought is, well, you have Medicare, you're opting out of Medicare, so you really should not be eligible for that subsidy that's coming in the marketplace. So it can get very tricky in that respect. Let's see. In reference to CDB, does this apply to non-disabled parent and disabled child? Oh, no. Okay, so in order to be eligible, in order for the child to be deemed to be a CDB, they just have to be found disabled prior to the age of 22. When a parent opens their work history, either through death, disability, or retirement, it's time to retire, and now they're going to get that check from Social Security. They hit the retirement age. That's all it's going to take. The parent does not have to be disabled. It's just one of the ways that an individual can receive the parent's work history payment, but it's death, disability, or retirement. Most people get CDB benefits based on their parent retiring. Okay. All right. So let's talk about what is EID. And this is a really big one. Okay. So EID is called the Employed Individuals with Disabilities. This is a Medicaid buy-in. Okay. I have to tell you, this is one of the robust and best programs I have heard of within the entire US. Remember, I worked in the Virginia system. Their Medicaid program, their Medicaid buy-in program is really horrible. It's the worst. And they will tell you that. So I'm not telling you anything out of school. EID is the Employed Individuals with Disabilities. Okay. It is also, it provides medical assistance or Medicaid. So it gives you full Medicaid. There is no maximum income. So basically what this means is, if you're working and you're deemed to be disabled, you have that medical eligibility, you're getting SSI or SSDI, you're eligible for this type of Medicaid. Okay. Your premiums are based on your income. The premiums are incredibly low. They might be $0. It might be $50. There is no maximum income. So over a certain point, it might be 4% of your monthly income. But that's if it reaches the $50,000 to $60,000 to $70,000 range. Generally, I see premiums between $25 and $35 a month. You can be as young as 16 years old. This is for someone who has SSDI. This is great. You can use EID to get medical assistance, Medicaid, and that supplements your Medicare, and it will pay your Medicare premium. Okay. So for that question that we just had about, you have to take Medicare, you have to take Medicare, but if the individual then works and there's no minimal amount or maximum amount to work, then when you apply for EID, once it is approved, will pay the Medicare premium. The current Medicare premium is $174, and it is increasing by $10 starting in January. And yeah, you can have both Medicare and employer-sponsored insurance and EID, but it gives you this, EID gives you that full Medicaid coverage, and it's just that other door that you can walk through for eligibility. And we help people with these applications all the time. It is an amazing program. For resources, for initial eligibility, you can't have any more than $10,000 in resources. But once you're found eligible for EID, you can have more than $10,000 in resources. They do look at the spouse's income, but again, there's no max. So like I said, I think it's one of the best buy-in programs in the country. I think every state should have a similar program. Every state has a buy-in, but not every state is as robust as this. So next slide, please. Slide 41. Okay, so the Maryland ABLE accounts, we had a question about this. So the ABLE accounts let people who were disabled prior to the age of 27 save money and receive money from others to pay for expenses to become more independent. Money in an ABLE account does not affect eligibility for Medicaid, and it does not affect eligibility for SSI and other public benefits. So it doesn't impact SNAP, your SSI, or eligibility to Medicaid. Contributions to an ABLE account are limited to a certain amount each tax year. In 2024, the maximum an individual the max that the per individual contributor is $18,000. So that means that for the individual, not per contributor, but for the owner of the account. The maximum person can have within the account is $100,000. And that is completely excluded from any of those SSI situations, any of the over-resourced situations, up to $100,000. And there is a lifetime max of $500,000. A person can open an ABLE account in any state that has it. It's not just the state of Maryland, but in any state. State of Maryland has a very good plan, again. ABLE accounts might be a better or less expensive option than special needs trusts. But you can have a special needs trust, an exclusionary account, and an ABLE account. Now in 2026, that age limit is going up to, I believe, 46. So in 2026, where if you look at the top of the page where it says ABLE accounts let people who are disabled prior to the age of 26 save money, in 2026, that age will go up to 46. The ABLE accounts really are very flexible. You can use them for pretty much anything you're looking for. There are specific limitations, but the limitations are really very few when you're looking at an ABLE account. I really believe that anyone that's receiving SSI or SSDI or Medicaid or any type of entitlement program should have an ABLE account if they were found to be disabled prior to the age of 26. You can have your income directly, if you work, you can have your income directly deposited into an ABLE account. So it's a great way to manage all of those pieces. It does not mean that if you deposit your pay stub directly into the ABLE account that there's not going to be an offset by SSI. You're still going to have that offset, but you're not going to have to worry about that resource limit. And a lot of people, when they get those back payments from Social Security, because remember, back payments are excluded for 9 months, that's the perfect time for them to open that ABLE account. They don't have to worry about spending down the money within the 9 months because now they've moved it over to an ABLE account and they're able to maintain that money and not have to worry about spending it down. Okay, so let's talk about Ticket to Work. Everybody's heard about Ticket. I get these phone calls all the time about, do I have to use my ticket in order to work? What do I do with my ticket? How do I apply my ticket? So Ticket to Work is completely free. The ticket is available when you turn 18 and when you receive either SSI or SSDI. Everyone has a ticket. Everyone gets one. Okay. Using your ticket is completely optional. The fine points for the ticket is that it can pay for services that will help you find and retain your job and retain work. It gives you access to an employment network that you choose that can help with all of those vocational needs that you might have. You drive the ticket. It's going to give that additional funding for really anything that you might need to walk down that path and make you successful within your employment goals. You control the ticket. Okay. And truthfully, you don't have to use the ticket in order to work. However, it's always a good idea to look at your options when you're looking at employment networks, when you're looking at working, to look at the supports that you might need and some of the programs that are available within the Ticket to Work situation. And I want to say TransIn is an employment network. I'm fairly certain they are. So it's very important to look at your options when you're looking at Ticket to Work. Again, it's completely free to you. There's the upside in this particular the upside is that you do get the support that you might need to get to that successful place for employment. Slide number 44, please.
And Marilyn,
Okay.
I'm sorry to interrupt. I just want to let you
No.
know that we just have a few more minutes left.
Okay, I'm done. I'm actually done. I'm all done. And actually, we can skip over this slide and get to the end slide, and I can answer some questions very quickly if you'd like.
Yeah, I think we should, because we do have some questions.
Yeah, let's go ahead and if you want to put my title slide up there, and yeah, so let's look at let me get to some questions here.
Yeah.
All right. So that's so funny. Okay. Does Delaware have this program? Yes. Every program in the US has a work incentive planning and assistance. And if I have that information. What's EID? I'm happy to talk about that offline. We had a whole slide on that. The person that's talking about their 24-year-old son,
maybe they could email you.
I think please email me on that one, because that's an individual situation where I'm going to have lots of questions about.
Yeah.
To get there. But yes, please take my email address and please email me offline, and we can certainly talk about all that. The maximum age on the ABLE accounts by state, or is it federal? It is federal. So the ABLE account is again, a federal program that's administered by the state. There really is no maximum age to own an ABLE account, but in order to open an account, you have to show that the disability occurred prior to the age of 26. Will Medicaid claw back ABLE account funds? Nope, they don't do that anymore. That law changed when the law first came into existence. There was a possible clawback. There is no clawback anymore. That law was changed. Okay, this person, again, it's really long, and
yeah, and we are just about
and that's
time.
very specific. Yeah, that's very specific. So the person that's asking about, I'm working with someone who wants to stop working and draw SSDI. If you could please just email me that. If you have a question and I'm not able to answer it, email me. I'm happy to answer that question. Yeah. If you contribute over $100,000 to ABLE, you could lose your SSI. Is there any contribution limit that would cause you to lose SSDI or DAC? No, remember, it doesn't matter how much money you have in the bank for SSDI. SSDI, you can have $1 million in the bank. They don't care. It could have an impact, though, on Medicaid. So if you've got SSDI and you have Medicaid, then it could have an impact on the SSDI piece of it. I think that's all the questions. Yep, but again, if I had to rush, if you had a specific question that was very specific to an individual, I really was not able to answer that, because I'm sure there were more questions, and that was more of a conversation. I'm happy to answer that offline. You can call me, email me, and I'm happy to have that conversation with you.
Yeah, and we appreciate it. I'm so sorry that we ran out of time.
No, I have a tendency to always run over, because I get very passionate about what I'm talking about.
And your passion and your commitment and your dedication to this program is evident, and we so appreciate it, and we appreciate the information. So that is it, and I'm going to go right back over here as I remind folks that we did share this PowerPoint, a copy of Marilyn's presentation. It is available on our website. You should have received an email from us that provided a link to the website. But if you go to our website, we do have a copy of that available for you. There is our website there, ADA info at Transcend. adainfo.org, and then our email address, adainfo@transcend.org for any questions. But again, please visit our website for a copy of Marilyn's presentation so that way you have her contact information and all of this great information that she shared with all of us today. So with that, I am going to wrap it up and thank you everyone for joining us today. We greatly appreciate it. We know there's a lot of information, but Marilyn did a great job. And thank you again. And we'll talk to everyone soon. Thank you.
Mid-Atlantic ADA Center.